Hi, everyone. Thanks for joining. We're going to get started in just a minute. And get started. Thanks everyone for joining. And we're looking forward to talking about building go-to-market orgs in the efficient growth era. And I'm really excited to have on someone that is doing just that, in Dan Demas, who's the Senior Vice President of Revenue and Operations at GRIN. And he's lived through both the growth at all cost era. He's now leading a team and building an organization that's competing in this new market that we're in. I know it's top of mind for so many people right now, and I'm looking forward to diving in from a practical standpoint and actually sharing practical tips, practical applications of this in the market today. My name is Dustin Amrhein. I'm the CEO and co-founder of Revcast, and we'll give you a little bit of context before we dive in. This is going to be mostly conversational. We do not have a lot of slide material prepared, so hopefully that's a good thing. And we invite you, we'll be talking throughout, but we certainly invite you to submit questions throughout, we'll do our best to address those at the end. A little bit of context about Revcast, because I think it'll come up a couple of times in our conversation today. And we're a platform that really focuses on helping sales leaders constantly put their go-to-market teams in the best spot to hit numbers, because we know that throughout the course of the year, your sales targets don't change. We don't have the luxury of changing, what our targets are in many cases, but certainly the path to get there does. And for us, what that means is we help you capture that plan in our system. So let's get out of spreadsheets, capture the plan in the system, measure it in real time, measure progress against that plan in real time, and most importantly, highlight areas for you to or highlight actions to take. So be able to say, hey, like, I need to change my hiring plan, and this is how I need to change it based on performance and market conditions. Or maybe I need to rethink the mix of my pipeline investment, and this is how I need to do it in order to close the gap from where I am and where my target is. So we capture all of that on a platform. We apply domain-specific, go-to-market specific AI, and we help our users navigate the year, frankly, in a way that helps them better hit targets. And I'm going to turn it over to Dan and let him tell you a little bit about the team and the company that he's leading.
Thanks, Dustin. Yeah, so I come from GRIN. I've been here for almost 4 years in the fall. And GRIN is a AI native creator platform, and we help brands that I believe most folks will know. We like to consider the most iconic brands, from Skims, Uber, Fenty, and we help them to build and scale world-class creator programs. So everything from discovering creators to the campaign management, affiliate marketing, social listening, gifting, payments, and more. And we essentially help brands accelerate word-of-mouth marketing and turn creators into the most powerful growth channel for them. So we do work with a lot of e-commerce brands, retail brands that are selling directly to consumers.
Yeah, a very interesting part of like the market today, this whole influencer marketing aspect and how brands are working with these folks to amplify their message. And it leads me right into like just the topics for today. And we talk about today's market, so doing more with less. We're going to talk and really dive in on scaling now, how we think about scaling go-to-market orgs now versus maybe how we did that 2 or 3 years ago, and the key differences. From a go-to-market standpoint, there are no more important investments than pipeline and people. And I want to dive into that with Dan. He's got some unique perspectives there on, what he focuses on and how he thinks about that constantly, and how he's constantly working across the organization, frankly, to align on how to best invest in these areas. And then finally, I mean, every decision that we make, and especially now, is just really high stakes. And I think you'll come to understand in hearing from Dan, how he uses data constantly to ensure that he's to give him confidence, basically, that he's pointed in the right direction. And so maybe we start, Dan, from the, and I'm just going to go off slides for a bit, but we start from the standpoint of how you think about today's market and the fact that we hear doing more with less, right? And doing more with less is like, what does that really mean? Like, how do you think about that in your org today?
Yeah, and I think, Dustin, when we first started talking about discussing this and what's changed, let me just start with kind of like a broad statement, is that I think historically, and this is across the entire revenue organization, we set out a plan for the year. We hired to the headcount plan at all costs. You don't fall behind, and you hire until something breaks and you attempt to fix it. And I think what we're dealing with a lot more now and our focus as we attempt to engineer productivity first. We add headcount later when the math starts to prove out. When I was thinking, what is the highest level message that I had when we started talking about what's changed over the years, to me, that's really the biggest difference. Now, when we think about doing more with less, um, I would say the key factor to the success of our revenue organization at GRIN right now is cross-functional data first collaboration. You mentioned data in the beginning, and um, we're working, with revenue operations plays a key role, marketing, finance, product. We have to be in lockstep with our partners, and we all have to be speaking the same language all the time. And we have to ensure that, especially now for us, I mean, we're dealing with a lot of turmoil in our industry with tariffs, um, but we have to be aligned around what quality revenue means, what we're attempting to fill the pipeline with, not just make a new sale, but does that customer retain with us? Can we make them successful? And our go-to-market organization leaders, our revenue operations teams, we're continually educating and reiterating the message of what the details behind quality revenue means and what our goals are. I still hear quite a bit from a lot of folks that I talk to, and they're operating in silos, and they have disjointed views on what customer value is, what ICP is, and it's just not going to work.
Yeah, talk a little bit more about quality revenue, because I think, in the course of working with you, and for background for everyone, Dan, I've worked with Dan in the past in the growth at all cost era, frankly. And Dan's now a Revcast customer, but you've told me a lot, Dan, about your focus for this go-to-market org on getting the ICP right first, like aligning everyone behind what the ICP is, what it truly is. And you did a lot of work to go prove that out. Like, hey, here's what it should be. And
Mhm.
then setting your go-to-market team up to focus on new acquisition being really really centered in the ICP so that it helps you down the road. But it's a good view.
Yeah. What ICP becomes critically important for two reasons. Obviously, I spent the majority of my career with you and in some places in the post-sales organization, and it was always difficult as a team to see the sales organization celebrate. And then on the post-sales side, we end up taking a churn hit because the customer was misaligned or expectations weren't set correctly. Um, and so it's also inefficient for my sellers too. If they're working deals and they're qualifying customers that we know aren't ever going to buy, or at least the percentage is not where we want it to be, they end up missing out on potential good customers that they should be working, that they don't have the time to work effectively. Um, when we set out to do our ICP definition, like you mentioned, again, it was around data. We looked at what customers are retaining, what's the ACV of those customers, do they grow with us, and ultimately, can we provide them value? I mean, that's what leads to the growth, that's what leads to the retention. And so while those were the data points that we assessed, ultimately what it came down to is both the customer and the company set up to help drive the outcomes that we're both looking for. And um, we reverse engineered from retention, from growth back into our ICP definition. Um, Again, I see a lot of companies and peers that I talk to, and they have an ICP definition, but it's more often hopeful. And they say, well, this is who we designed the product for. but they're failing to validate that against the the retention rate, against NPS, against growth. And you see this. This is who we thought we were supposed to go after, being very misaligned with who's actually getting value from the product.
Yeah. I mean, we see the, I mean, we've seen this, you mentioned our days running post sales, and we saw it all the time, to your point. And I think what I'm seeing from the revenue leaders that I talk with, on a regular basis is exactly what you're doing. Now, I think you were more data driven maybe than most, in the way that you went about like defining the IC, like refining, defining, basically, prove to the company what the ICP really is. But there is much more focus on the top of funnel now, and saying we've got to get the right customers in, because the way that we're going to grow, big part of the way that we're going to grow now, is expanding value, and of course capturing more revenue from
Yeah.
existing customers, right?
Yeah. I think you can't assess this though even up front. Like if you take a lot of the retention and the lifetime value of the customer and you start applying that to the front end, I mean, you find out that a lot of your non-ICP customers just aren't profitable for the company. And it's
Yeah.
again, look back 5, 6, 7 years, you would never say we don't want to do business with somebody. But now if we're looking at growing the company in a profitable, efficient, and scalable way, um, deciding not to do business with somebody that you know you're going to be underwater on if you don't keep them for 2, 3 years, when they're on the smaller end or lower end of the market, doesn't make sense for us anymore. At least not right now.
Yeah, and it's hard, like, to your point, even now, it's hard. Like, you have the company view, but you have individual reps that have quotas, right? And it's hard to walk away from a prospect that says, I'll buy your stuff," right? Like, "I'll buy your
Mhm.
product." Um, Talk a little bit about how you are basically setting up incentive structures and thinking about incentive structures as it relates to those ICPs.
Yeah, this has been something that we've been playing with quite a bit. We're still trying to figure out the right model for this. When we first reoriented ourselves back on ICP, it was we had to change the culture of the organization. We found that oftentimes non-ICP customers, we ended up in a race to the bottom. They tended to be, again, the smaller customers, and so there was less friction in the buying process. We had much easier access to decision makers. Um, and the deals happen faster. And so a lot of the reps would gravitate down to that area. And we really had to take a pretty tough stance on it. And so for roughly 6 months, we essentially played keep away. We filtered those leads out. We directed them elsewhere, sometimes to other products that were designed for the low end, low
Mm.
barrier to entry, month-to-month contracts, get started in a low risk kind of a way. We've since started to open things up, and we have incentives for signing ICP customers that are different than non-ICP customers. We've also, which I'll talk about later, changed some of our pricing model, which allows them to self-select out. We also have changed our entire outbound strategy to where outbound is only allowed to our tier one and tier two ICP. And so those are the ones that are more difficult to get in. They require multi-threading. And so when we're putting our most expensive resources out to generate pipeline, we're ensuring that they're at our highest value prospect level. Um,
Yeah.
Inbound is a place where we're still toying with the right mix, and we've recently opened the gates a little bit more, um, due to our pricing changes. But that's an area where we're constantly testing and watching to see, have we made the right choices here, and if we open the floodgates a little bit more, if some of our product enhancements actually widened our ICP a little bit more than it had in the past. But we have to make a gamble there because it's a 12-month kind of
Right.
return
Right.
that
And
that
this
we're
is
waiting for.
ultimately, to your point, this is all about, how do I efficiently scale this out? How do I make it repeatable, consistent, efficient? And you have, as it relates to how you think about making investments in people, and how you think about making investments in pipeline, like, where do I go generate pipeline? You are taking a very rigorous approach there, right? Like, you
Yeah.
alluded to it earlier, but you have a very specific point of view on how you need to scale this organization up.
Yeah, and what it comes down to, I think if I was to think about some of our core metrics right now, I would say that it is output per IC. And so we look at that within the different roles, and we're very heavily focused on that. Obviously, on the pre-sales side, we're looking to grow things like our ops per BDR, our ARR per fully ramped equivalent AE. On the back end, we're looking at, can we allow an account manager to handle more customers, maintain the right amount of touch points while maintaining the desired net retention, net revenue retention for each of them. Um, that's kind of like the foundation for what we do, and then starting to dissect that. So looking, full funnel from a sales perspective, we're looking at our customer journey, um, and whether or not our customers are hitting the right milestones along the way in the desired timeframes. I think it's generally easier to talk about the front end because your feedback loop is a heck of a lot faster, so it tends to make for more fun examples in conversations like this. But we're mirroring our kind of approach on both sides of pre and post sales.
Yeah. And I end up talking to a lot of revenue leaders about hiring. And there's something that's interesting that's sort of flipped in the market over the last, couple of years. It really revenue leaders used to always push for more heads. I'm generalizing, but for the most part, it's like
Yeah.
giving more heads, I'll put more quote on the street, we'll grow faster, was sort of the notion. And finance was always stepping into the breach and saying, wait, like we need to make sure that we can be successful and this is somewhat efficient. And now I talk to more and more revenue leaders that are pushing back on hiring plans. They're like, what, we can't hire there. I can't make those people successful. And I not only am I not going to make that individual successful, but I also know that my feet are going to be held to the fire from an efficiency metric standpoint, like something akin to what you talked about, output per IC. The uh, you are you think about this constantly. I know we talk about it in the context of Revcast as well, because you're using Revcast to collaborate with your head of finance and the board about, like, what does future capacity look like? How do we think about growing this org? What are the returns going
Yeah.
to be? But talk about some of the things that you've set up to give you more
Yeah.
confidence in hiring.
Yeah. I mean, I think to say it very plainly, historically, it was a capacity first, demand second plan. And now we've moved to a pipeline driven planning model where it's demand first, capacity second. Uh, there's still challenges in here which I'll talk about. It doesn't all of a sudden magically solve all your problems, but we start with looking at um, our MQLs, what's our projection, what's our growth trajectory, SQLs, opportunities that we can create by channel, month by month. We take it down week by week, and then we run the math backwards based on our conversion rates, win rates, and we do have to make some assumptions in there, like what improvements can we make with additional investment. Um, but then we're sizing headcount to match our demand, and then I think the important thing after that is done is that then you have this milestone driven hiring and budget release afterwards. And it doesn't change the fact that capacity is still required. It's a different approach to how we look at getting there, and it changes so the conversation with finance. Um, we're both looking at data, and when we choose not to hire, we choose to hire. There's no
The same
um
data? Are you
the
guys aligned
exact
around the
same
same
data,
data?
100% same
Yeah.
data. Yeah, we have to, and it you know but it's no longer a ambiguous conversation around like why or why not. It's like, well, we can both see it, and then the question turns to, okay, well then how do we fix this, because we still have to hit the plan. And so then we're solutioning together around where we can make investments. um One of the conversations that we had at the last board meeting, and that is ongoing with us, is, when I say the math has to pan out, I'm not waiting until I have, 100% coverage of pipeline to hire my next 2 or 3 reps. And so I am still hiring ahead. It's based on the trajectory that we're on. And so at what point do I go do that knowing that I have a ramp time for these folks? Um, and I don't want to get behind on my capacity. So you are still placing bets, but the bets are much more measured, and it's very, very calculated risk as you're doing that.
Yeah, and it's interesting because you do, like you alluded to it, like at some point you have to take a leap of faith a little bit. Like you have a lot of data, you're built, like pipeline looks good, looks strong, looks like you can continue to efficiently build it through the different channels that you're investing in. But it takes a little while to hire people,
Yeah.
right? So it takes a little while to onboard them and make them successful. And we spend a lot of time modeling that out with our customers, obviously.
Mhm.
And I think you've used some of that modeling to just align people on some of the like same page. If we pull the trigger now on hiring, this is when I expect that person to actually start making contributions to the business. So I think it's often eh, intellectually we all know you can't just hire somebody in day one they're productive. But
Right.
sometimes that gets lost, frankly.
Yeah. And again, this is where tools like Revcast really help with a lot of the scenario planning and help also to remind us. I mean, you do have to deal with attrition, you have to deal with performance improvements, and so um, you have to have bench players. You have to be hiring ahead in anticipation that the unexpected is going to happen. And so, as I mentioned, it sounds like all of a sudden the formula just works. You still have to get outside your comfort zone, and we actually spend a lot of time talking to our frontline teams about the dynamic because as they're starting to tip the point past the required amount of ops that they need in order to achieve the quota, the attainment that we want, all of a sudden they're starting to say, hey, life is actually pretty good right now. And we have, one of the elements of this thing is we have to be careful that we aren't creating bad habits on their side that now 3 4 months later when we have 2 or 3 people turn on that they're experiencing this dip um, in the ops that they're getting from the company, and they've lost the ability to self-source at the appropriate levels and so on. So um, it's still a balancing game, and we're watching all of these things as we're trying to make these decisions.
Yeah. It's a big part of scaling efficiently, right? As you add people, you certainly need to keep a certain level of performance. Now, the more you add, typically, you come back a little bit for maybe certain attainment levels. But one of the things I think is really interesting that you've done at GRIN is you've worked to take a lot of the ambiguity out of performance expectations in terms of how you measure the team and how your frontline managers measure the team.
Yeah, it was when I took over the organization, we had laid some groundwork, but when I was just running the operations and services group, but I took it all the way once I had all of the revenue org, and it was through discussions with the frontline teams. What's keeping you up at night, what's preventing us to optimize our new sales. And one of the things that came out was performance planning is not very clear to us, and it doesn't seem like it's predictable enough for me. And so we we actually worked with them to understand what are the concerns, what's unclear, what is actually driving behavior on your part that we could solve for. And we have a number of posted documents now from, career path to the levels and what everybody gets paid to performance planning and how we look at it, how we measure it. And we've taken most of the decision making away from the frontline managers. They actually very much appreciated it as well. But we really,
I do. Yeah.
back to the main point. If we're running an efficient and productive company, the frontline teams have to be working like a machine, and we have to take away the distractions. And so creating an environment where performance expectations are very clear. We see that the reps are now much more comfortable. They are meeting a lot of those expectations because they know what they are. And now frontline managers aren't having to have these subjective conversations with their team around, hey, we're going to have to move forward with a PIP. Um, oftentimes that was happening too late anyway. We want to get in front of that. We don't want the PIP to be the final formality before we release you out. We want it to drive the right behavior. So
Right.
we're starting them sooner. There's no surprises. They're all being applied consistently across the organization, we've actually seen attainment go up because of it.
Yeah. I mean, people are the biggest investment that you have in your go-to-market organization. So on one hand, like what we talked about earlier, I want to make sure that I'm putting people in the right parts of my business at the right time to be successful. And the second thing is I want to make sure, we have the right team
Yeah.
as we scale this up for performance. Just a reminder, folks, please do submit your questions. We're definitely going to come to that towards the end. But Dan, the other big part of, a go-to-market organization, and I think you own some of marketing, right? If not all of it.
Growth marketing. Yeah.
Growth
I do
marketing.
not own brand marketing. No.
Yeah. So you own a lot of the demand gen side, the overall growth side, and you've been since you've taken over that part of the business, I think you've been focused on understanding at a detailed level, like what's our best, sources of pipeline, how are they performing, and then how do I take, I think what you would call like small bets, test
Yeah.
them quickly and expand it if it's working.
Yeah. We review data very, very frequently, and I talk about that a little bit later, but it's critical, again, like you said, that we're all operating off of the same data. We're all operating off of the same information, and pipeline is one of those biggest places. The very expensive part of the organization where money can evaporate very, very quickly. And so we review what leads are coming in from what channel on a regular basis, what's the spend. We're looking at what is the percentage of ICP within those channels, what's our close rates from those channels, um, what's our retention, et cetera. I mean, like we're diagnosing the whole thing every single day. And uh it is one of the places where we're moving investment back and forth based on what we're seeing. And we had talked earlier about how we're making decisions around what we let through to our sellers. But if we see that there's a channel within inbound, whether it be paid social, paid ads, are the webinars that we run, the events, so on. I mean, we're going to allocate money to what's driving the best quality pipeline for us. When I first started working with the growth marketing folks, a lot of it was just around MQLs and a conversion to SQL, and it's a now requirement of understanding what's the revenue that's been driven from that channel. And we've seen so we've pulled back in some areas, particularly like our paid ads, and we've seen the volume of MQLs go down, but we've seen the revenue go up. And so we've become a lot more efficient in that area. But if we would have been using our historical metrics to say, like, how is the channel performing, it would be an extremely alarming story right now. But when you take it all the way down to the end of the funnel, it's actually a great story, and we've become a hell of a lot more efficient.
Yeah, it's that thing, right? Like you plan for something usually at the beginning of the year, you lock it in, and then the question becomes how often do you inspect it? And I
Yeah.
talk to so many teams that the answer to that question is quarterly or semi-annually, and it's just not enough. Things move too quickly, especially now. And I think, one of the things that I see is sales leaders in particular are becoming much more involved in pipeline inspection. And I don't mean deal inspection, I mean pipeline performance inspection. Where's that pipeline coming from? How is it performing? What's my ASP win rate cycle time for this source versus that source?
Yeah.
And how do I close gaps throughout the year? I mean, it's a big part of what we like highlight in our platform, and it's a big part of what we help people plan for, so they understand, here's my plan, here's my performance, how should I
Yeah.
change? Right.
Yeah. As I mentioned earlier, Dustin, I mean, we're in an industry right now that is experiencing a lot of like turbulence, and we instituted daily revenue stand-ups, and we do a pre-sales and a post-sales stand-up, 15 minutes every single day, where we're talking about our pipeline. We're talking about deals we won and lost the prior day. We're unblocking the team. We're reviewing data. So, I mean, I wouldn't say that it's down to where we're reviewing these metrics necessarily on a daily basis, but it's pretty darn close, to where at least one of them comes up every single day, and we need to check it. We need to understand what these indicators are telling us, and it's really allowing us to take what maybe used to be a surprise at the end of the month and turn it into a real time like decision that we're able to make and help unblock something and prevent uh underperformance at the end of the month for a reason that we didn't understand. Um, to the point where I think these stand-ups will likely become part of the fabric of the organization even after we exit this period.
Well, a big part of what you're talking about too is setting a culture of data, like being data driven, and of using data to inform action. Now, we'll talk about this in a bit. There's a fine line there. You can appreciate the amount of times you have
Yeah.
to tap into instinct, prior experience, and things like
Yeah.
that sort. But one of the things that I think you do is, and you do consistently and intentionally, is you're very transparent with the data. And you're transparent in the sense of everyone in the org sees that data,
Yeah.
frontline to execs, and they all see the same data. That's important, right? I mean, aligning on the same set of data and seeing it constantly and it being reinforced is crucial.
Yeah, this is if you're a leadership team attempting to create a culture of efficiency and productivity, but you're the only ones that understand the details behind it, it becomes really difficult to where it's kind of like parenting, I guess, in a lot of ways, if that's the approach you want to take. But if we can bring the employees in to what we're attempting to accomplish, why we're making the decisions we're making, um, everything starts to work quite a bit better, and things become more discussions than friction. And I think one of the areas that I feel we have to watch out for in this is that we don't have employees misinterpreting data without context is one of the challenges that you do run into when you do this. Additionally, people overreacting to data too quickly. So you don't want to make rash decisions. Um, and then lastly, you have employees kind of over indexing on, well, I didn't take that opportunity because I felt like it might be, it might waste some money or it might waste some resources. So those are three things as we've started to publish all of this information out to them, whether it be our board decks, our churn data. We have Slack channels where they can see every churned customer. We have Slack channels where they can see every expansion, every new customer win. We publish a churn analysis every single month that shows them every single thing that we know about why customers are leaving. Publish voice of customer. We have voice of customer channels where they can see feedback in real time. And we've had team members come back and say, in our TGIFs, which we do every Friday, and we talk about each department's performance. We got a question one time that somebody said, I don't like the churn channel. It makes me feel sad. And, it's like, hey, look, the goal here is to be transparent. If you don't, customers are going to leave. And so if you don't want to see it, that's okay. But we want to make it available and you got to use it responsibly.
Right. Right. No, it's really it's interesting. And we both, like, the culture that we worked in together was extremely transparent, right? And I always thought that that had a great way of galvanizing people behind goals where they didn't just so they saw the data, they understood the goals, but they understood the why behind it.
Yeah.
And I think that's important because then they make better decisions every hour of the day, right? If they
Yeah.
understand, like, the why behind.
I have my biz dev managers and my sales leaders talking about CAC all the time. I mean, like they're trying to drive down acquisition costs. They're trying to make sure that we're efficient with our spend up front. And it's not a normal conversation, I don't think, for your biz dev leaders to be at
Right.
least considering it as they're going about their day.
Right. So if I kind of conclude some of this and summarize some of this, obviously data drives decisions, collaboration and transparency is really important, and the ability to actually inspect your core assumptions, you say maybe not daily, but almost daily, but certainly in real time and not waiting for like a QBR are kind of the things driving your approach overall, at GRIN. Talk to me about this. So you're seeing all of this data, you're thinking about the business, you're thinking about, okay, how do we get better in certain areas? I know scenario modeling is something that you do a lot and think about a lot. Like, how do you, and you're using, I'll be clear, you're using Revcast to do a lot of that, but how are you taking that information and how are you taking what you're seeing, charting out different scenarios and presenting it in an effective way where it's not overwhelming, right? It's not too often.
Yeah, it's a good question. I think one of the things you and I had discussed coming in here, by the way, was yeah, I think our go-to-market teams, the relationship with our CFO has changed pretty, or our finance team has changed quite a bit because we're able to do a lot of our own scenario planning. We are ensuring that we are running an efficient organization. And so the rather than this push pull with finance about how much more money can I have, we're coming to the table with a number of scenarios that we play out in tools, spreadsheets, um, many different things. And we're coming to them saying, here's what we're seeing. We know you have access to this data, so that's not in dispute. Um, and then here are ways that we're thinking about reallocating things, whether it be changing up the segment that we hire the rep in, whether we change like a BDR headcount to a productivity tool for all of the BDRs, and we estimate that that's going to take our BDR ops per BDR from 5.6 up to 6.6. And if we go run a trial for 1 to 2 months, can we show that we can achieve that trajectory? So I think, how do we do it in a way that's clear? One, a lot of the groundwork's already laid because we are using same information. Two, we're able to run a number of scenarios on our part first, select a few that we think make sense and that we can execute on, and it's a very specific and narrow ask that we're doing. And then now they're coming and validating our assumptions, validating our approach, and actually a lot of times they're saying you can probably spend a little bit more over here if you do X. We think that's a good idea. Or did you consider this to achieve the same outcome?
Yeah, it's interesting. I always chuckle when I run into a leader on the revenue side that says, "Well, I don't own the plan, finance does." And either the plan's going to be dictated to you or you're going to take control of
Hmm.
what it you need, right, to hit your targets. And I think actually, the CFOs that I talk to as well, that they love that proactive approach of a revenue leader coming and saying, like, "Hey, this is what's happening in the business. To your point, we're all seeing it. Here are 3 different options that we have, and let me explain to you the pros and the cons and the one that I recommend." But like that proactivity to say things aren't going to course, we're going to need to change. Like a CFO loves that. They're all about mitigating risk, right?
Hmm.
That's a big part of their job.
Yeah, nobody wants to go into a board meeting with any surprises, and especially when we're on the same team. And so, being able to project capacity attainment out into the future and then run that 5 different ways is critical. And um, I don't know, the relationship with finance has changed very much from adversarial in some ways to very, very collaborative. And uh, rather than being told no more often, I'm being told yes and more frequently than I
Yeah.
have ever.
It's different, right? Like it used to be CRO, CMO, and now increasingly I feel like the most important dynamic for a company, a SaaS company right now is CRO, CFO. Like, are they aligned? Are
Yeah,
they, you know, in lockstep on these major decisions?
yeah, yeah. I would 100% agree.
Awesome. Anything you'd leave the audience with?
Um, I would just say, like as you and I discussed, data is absolutely critical to what we do. Shared data. Um, and I think that once you are able to get everybody talking the same language and on the same foundation, like we spend a lot less time in a meeting trying to convince everybody that the foundational things we're making a decision on or that they need to understand are correct or um, are understood. And we've moved now to basically everything is democratized decision making. So we're spending most of our time solutioning problems together rather than trying to convince somebody that there is or isn't one.
Yeah. Yeah, yeah. Makes a ton of sense. Well, let me switch back over here and just a quick reminder that Q&A is open and if anyone has anything additional. Um, I don't know if we have anything in Jennifer or not. Um, but what I will say is along the lines, and we can come back to the Q&A, but along the lines of what a lot of what we discussed today, A lot of what we talked about, if we just take it up to the top level, is I have a plan. The plan is a series of assumptions, and I always need to know how I'm tracking toward those assumptions in order to put my team in the best spot to hit targets, in order to put the company in the best spot to hit targets. So a lot of what, this is a lot of what we do on the Revcast side. This is entirely what we do. And we have an offer for anyone that has attended today where we will actually come in, take your plan, look at both your current performance and your historical performance, and help you understand the likelihood to hit your plan, but also the changes that you need to make across both the people and your pipeline investments. So we look at everything from the individual employee up to teams, up to segments, up to the entire company. We give you back this exhaustive report that says this is the track that you're on. These are the areas to focus and change. And here are different, to the point that we were just talking about, here are different scenarios that give you a better chance to get your plan. So we often do this when we onboard customers. We also do it as a one-time service for, as you see here, 5,000, but it's free if we don't find anything. So if you're on the golden path and the insights that we provided didn't tell you anything, we're certainly not going to charge you for that. But if you're interested in that, certainly email me at dustin@revcast.com, and we can go from there. But I do have a couple of questions that have come in. One, Dan, sharing data is a good idea. What's the right data to show and the right amount, right? And the point our audience member is making is too much data just maybe is distracting and raises a lot of questions that aren't really pertinent to what you're trying to get at. Like, how do you make that? How do you filter?
That's a great question. I mean, we struggled with this for quite a while. And I think that ultimately we had to determine what the key, I like to call them like strongholds, are for the organization. And these were things that weren't too far down to where they were distracting, but they were high enough that almost everything had to pass through them. It's kind of a difficult thing to get to. It's like it's hard to describe, but when you see it, you see it, type of a moment. But that's where we look. We look at some of our. We got to a place where looking at full funnel conversion rates was something that we could all agree on. We started to look at, like I mentioned, productivity per employee within our different groups, and these allowed us to signal to the rest of the organization that something wasn't going quite well, but there wasn't enough there for somebody to go down a path that led us into a weird direction. Um, Additionally, by sharing this very frequently, daily, if not weekly, paired with our stand-ups and our leadership meetings, we were able to kind of do these micro adjustments and talk about things live, and the frequency alone allowed us to have discussions about it. I do think additionally, there are a number of cultural aspects that were needed for us to overcome in order for this to become possible. And I had put some thoughts down when I was thinking about what we would talk about for this webinar, but it took me a very long time to ensure that everybody started to feel comfortable saying, I don't know, here's what I'm seeing, and I don't have an answer to it. We've exhausted all of our options here. And once we got to a place where people realized that they were safe to bring those discussions to the table, um, conversations around issues with data, like or red flags within the data, started to become less contentious because it didn't feel like a witch hunt, and we were all actually okay talking about the real issues that were happening in the team. And nobody was sitting there trying to defend a position or defend a team. It became, this is what I'm seeing in the org. I agree there's probably a problem here. What do we all think? So
Well, and
data plus culture.
yeah, and I think of course, like everyone understands this. It certainly depends on your audience, because I remember when I would go in and ask a C team to invest in something or to make a change in the business, I would have either 2 slides or 2 pages of a document, and it would be, this is the change I want to make, or this is the investment that I'm asking for. Here are the 1 to 2 key data points of why I'm asking for this. And then my second slide was like, yes, but, because you might get someone in the audience saying, yes, but what about X, Y, and Z? And so the X, Y, and Z metrics and the data and the supporting detail are always on that second slide, but I always tried to start saying, this is the most important thing.
Yeah.
Focus on this. And if you want more supporting detail, great, I've got it for you, but we're not going to start there because I think to our audience members' point, it's a rabbit hole. You're inviting a rabbit
Yeah.
hole discussion.
The
Right.
the appendix, as you
Yeah.
mentioned, Dustin, is very much your friend.
Yes. Yeah, that's right. That's right. So one more question before we wrap up, Dan. You've got you own revenue, you own operations, you own growth marketing. How did you just high level? What's the structure like of that org, and what do you think others can take away from that?
Well, I think we are organized in a fairly standard way. So there's about 45 folks across the organization. We have our new sales org. That leader also runs our business development and our SDR team. That was one change that I made where the SDRs and BDRs both report up into the same group. We have our growth marketing team, um, and then we have account managers and revenue operations, and we did have pro services in that group as well. So I don't think there's anything too non-standard about it. Um, I do think, though, one of the things that folks can take away that in this era is really important is that if you notice in that group, all the pipeline generation is under one leader. That was
Yeah.
a big deal for me and my CEO, is we said, like, we need one person that feels accountable to this. We need all of those resources in the same area, so that they're not competing with each other. They're working together, and that leader has full view of everything that's required to hit the number. And so that was, I guess, I don't appreciate it as much as I should. One of the big changes that we made that has made a big difference.
Yeah. And we had a follow-on question to the first question about data, and it made me chuckle. Um, and the audience member says, I had a regional sales VP come into a meeting, I'm assuming with competing data. Have you ever experienced that? And only about 100 times in my career have I been in a room where people were looking at different data or just they thought about KPIs differently. And like, as funny as it sounds, I've been in a room with on the sales side with marketing where we were talking about win rates in completely different ways from each other. And this is a huge thing for us at Revcast. Like, hey, you're aligning on a plan, a set of assumptions, and we're all calculating metrics in the same way. So there's no way that we're going to come in there and talk, from different data. We may make different conclusions in some cases, but the data is going to be the same. Dan, I know you've experienced this because I've been in the room with you, but what do you think about that?
One, I've experienced that. I mean, there are certain cultures just where that's going to happen. But one of the big changes that we've made over the last 6 months that has opened a lot of doors for us is I'll say, adopted a very Amazon type behavior where we have pretty well stopped presenting in our meetings. Everything is communicated beforehand, and this goes all the way up to our board, where we use essentially pre-read memos, whether it be a page, 2 pages. In the case of the board, it's 6 to 7 pages, but everything is written down and socialized beforehand. If we don't have the time to do that, we spend the first 5 to 10 minutes of the meeting reading. Um, in those cases, we're sharing ahead of time. Nothing is a surprise in the meeting. We've all had a chance to ask those questions ahead of time, become aligned ahead of time. And so when we're actually in the call, one, everybody has a lot more context. They're not learning on the fly what I'm trying to communicate. And we can schedule time to say, let's talk about the discrepancy that we found ahead of time, and let's spend time solutioning on what we actually came here to solution. And it has changed most of our meetings from a watch, from a presentation and everybody else is watching show. And particularly in our board meetings, like, this changed it to a full on, like, very engaged discussion. Um, the amount of, like, back and forth that we're having with the board now around sharing ideas, it really, like, brought them in, and it has been one of the most refreshing things that I think changes that we've made in the last 12 months that I'll look back on and definitely leverage that in the future.
Yeah, I remember we did something very similar in one of my last companies, And I remember being very skeptical at the beginning. It's like, wait a second, we're scheduling a meeting in the first 15 or 20 minutes or whatever. We're just going to read together in a room. Um, but the fact is nobody does pre-reading, right? So book the time in, everyone get on the same page, and then you can have a more fruitful discussion. And it's not like, well, I thought this and I thought that. It's like, no, this is this is a series of facts right here. Then we're going to discuss what those series of facts mean. I think that's great.
Yeah,
Well, Dan, thank you for joining us today. I know the audience got a ton, and thank you everyone that joined. We'll definitely be sending out a recording and a follow-up. If you're interested in this, our plan assessment, please definitely reach out. And otherwise, have a great rest of your day. Thank you.
pleasure. Thanks, Dustin.